This morning, February 24th, we are ultimately tested for patience and discipline, and we are watching once again the importance of this Fibonacci-based support and resistance levels that are AlphaWaveTrader Proprietary Levels. This is our trade on oil 13 range that had been actually pretty aggressive trade. Why? Oh why? Because oil, the bullish trend on our guiding light 1 hour, had shown very clearly that buyers are very tired and buyers had not been able to break through decision point 1. This is the most critical level in the market structure. All the levels applied to this chart were drawn on February 22nd. This is a reminder, if you know where these levels are, with decision point 1 remaining the most critical level in the market structure, you know to always and forever monitor for classic short. Do not acquire long position, trend position into this level. This is how important these levels are, and if you're taking long, this is where you take profits off the table. I expect this to be a very classic chop zone and very big indecision on oil to continue. It would be very big surprise if oil will find enough power to blast through this level. So I pay to my guiding light 1 hour chart for Fibonacci levels before I would ever place a trade on my range chart. It's been trade we've been in for half an hour for all the reasons we discussed earlier. Bulls don't have enough power to be in a trade on oil currently for 34 minutes is telling you what the difference is between aggressive versus conservative trade. And this is how critical these levels are. Oil sitting against reversal zone for the last 8 minutes. I'm adjusting my trail to 102.58. This is very critical target level. The same level where S&P is taking major pulls on 1 hour chart. This is major trend reversal zone. S&P at its ultimate high. And will we get a powerful pullback, as two things happen when this ultimate resistance level is reached? Either opposite trend correction or opposite trend reversal. So far we're seeing only a correction. And what will oil do when it will revisit our critical end of minor trend? The struggle is on, as expected. As you could see, oil had been trying to 1, 2, 3, 4 hours to break through this level. That's why there is nothing here except pretty aggressive trade. For us to be on 13 range chart in a trade currently for about 40 minutes is unheard of. There is nothing else is here. Price is struggling to break through reversal zone on oil 13 range, just like S&P is struggling to break through reversal zone on 60-minute chart. Each and every trade placed using only price action, and we're witnessing again the struggle as expected. So let's recap what I do as I see a couple of new faces. This is how we place the trades in our trading room. This is always the stop line. When we have the visitors in the room, I bring up this actually Fibonacci target tool. It's not an entry tool. And I say the entry 1838.25. As you could see very clearly, there is no word entry here, because this is only for visitors. It is actually a target tool. As soon as I'm in a trade, I adjust precisely my levels for precise and critical target levels, as you could see played out on S&P this morning, reminding you how critical each and every level is. So again, each and every trade placed with announcement of the precise trade entry, red line is a stop level, and then Fibonacci target tool is upright. That's all there is. Pure price for entry and Fibonacci for exits. And let's see what oil is doing as it reached reversal zone. So, the good thing that will happen is S&P, just like oil, will give us a powerful reversal. But guess what? It's highly unlikely because this bullish trend is vicious, spectacular and powerful, and very critical historical levels had been reached. So all we're getting is bearish correction because bullish trend is exhausted. And oil is doing what? As expected. Don't be surprised. We'll either get massive chop, 5th hour in a row, or we get a powerful reversal, reminding you how essential and critical these Fibonacci levels are. And they are never ever ever to be ignored, as this is how price moves between these very critical levels of support and resistance. This level is exact same identical formula as Apple monthly. That's where Apple reversed from. All the levels drawn since 2010. Formula remains the same. Doesn't matter if it's stocks monthly, doesn't matter if it's oil hourly, or the chart that's method demonstrated on in the trading room, range chart. So here it is, that's simple. Pure price for entry with Fibonacci tool applied, red line as a stop. Everything I do for demonstration purposes only. That's all there is. Pure price is all that matters before you ever place a trade. Fibonacci are critical for profit taking.